Hey, all right, you got me now? You got my bad. Hold on, let me make sure my music is turned down too. All right, all right. Can you hear me now? All right, so I said, that's like, it's like we just did this. Mic not on. It is now. I know it is. I think it's just a delayed response now. Give me a one in the chat if you can hear me. Put a one in the chat if you can hear me. Let's get it. All right. So yeah, we just finished like a quick 15-minute like training session, and I think it was pretty valuable for that small amount of time. But I felt pretty good about it, and hopefully I helped people. Rather you have been doing this for a minute and need a refresher, or you learn something different. A lot of times people get deep into this game and they think that they've been in it too long to learn something new. Hey, you never don't ever be that person. All right, try your best to have something. I call it a red belt mentality. All right, I keep this on my desk. Right, it's a red belt mentality. What that is, look, like, so when you are practicing karate, right? Well, it used to be like this, where it's a red belt and then a black belt, right? The hardest worker, in my opinion, was the red belt, right? Because the red belt was doing everything that person could in order to achieve the black belt status, right? But guess what happens once you hit the black belt, right? All the black belts, you see them, they get all like big and they get winded and lazy. Why? Because they've arrived, right? They've made it. They don't need to learn anymore. They don't need to do anything. So they turn into teachers and they sit back, whatever. That's not the mindset that we need in this game. We need to have red belt mentalities, all right? So always, always be grinding, always be growing, right? Grinding to grow, growing to grind. I think I heard that on YouTube before. It's a dope saying, right? You just always trying to elevate yourself. Never be too big to learn. Even my guy KG, I don't know if he's here, but KG, like, he shouts out the crown traders all the time. Like, let us know that he's learning stuff too, and we know it because we see him adapt certain things and talk about it. He learns something, he gets skilled and knowledgeable at it, and then he teaches it in the way that he teaches because he's an educator, right? So we're all here learning and growing, right? So always be that person learning. Okay. So that being said, I have a series of information that I want to go ahead and follow through with KGU in my Discord. However, we also have to keep in mind that we have a endless amount of new people that are coming in that probably didn't catch part one and part two and part three and whatever of all the training that I've done in the past, right? So I need to make sure that I do take the time not to get too far ahead when people are just tuning in, right? So I think the last time we talked, I forgot exactly what it was about, but nonetheless, I know we got all the way up to like the QVP, which is like if you're a beginner trader, you don't want to look at that. Absolutely not. You don't need that headache, right? So we got to dial it back. So that's why I did the 15-minute like quick training session, so people can just know how to just get started, get a template, a foundation on their approach to the market, and then we'll build onto that. So today we're going to cover the supply demand, right? We're gonna touch on the support and resistance. We're gonna touch on the zones to which we trade, not just like the supply and demand zone, but the trading zones. And then we're gonna, if we have time, we'll work into the price action too. I did what I did last session just minutes ago with the quickness, and it was pretty seamless, I think. So I'm gonna try to do the same thing. I'm gonna leave this up so you can rewatch it through through Thanksgiving or whatever. Okay. So, but before I get started, um, put a one in the chat if you're interested in more information on supply demand. Okay. I'm asking that question because there's some nuance to it that I can dive into it a little bit more. Right? It's not rocket science. It's just like once you figure it out and you just know it. Um, but just let me know. Because otherwise I'm kind of gonna like skim through like the process here, just to get everybody like dangerous. Okay. All right. Last up, if you are green when it comes to charts, right? Hey, put that in the chat. Let me know if you're a minnow. I need to know where my minnow's at. Okay. We're gonna do this. I'm doing this because I just need to recenter, right? And I need to stretch my time a little bit. We're gonna get into it, no problem. Okay. But I do want to know who we have here that considers themselves like green when it comes to this. Like you've been introduced to the market, but you still are trying to figure your stuff out. Like, I mean, we're all trying to figure stuff out, but you know what I mean. Like, you're still trying to figure out some of the basics. If you are a minnow, you can find a fish or you can just type minnow. Okay, do that for me. Find a fish or type minnow. Okay, Rebel. Okay, I see you, Queen. Okay, so Rebel, I think I seen you in the live the last stream, which is great because that's a good foundation layer. And then so for us to talk about what we're about to talk about. So we're gonna recap that and then go into what I'm talking about here. But without further ado, well, I'll look at the chat, but we got to get going here. All right. So let's see here. All right. So if you were part of the last live stream, you know that we just covered the zones. If you didn't, I'm gonna break it down real quick, and so we can move on and get back to business. So this is a chart of SoFi, right? All right, Queen, I see you. Uh, this is the chart of SoFi. Love the minnows. Minnows, show up. Please let me know that you're here. This is the chart of SoFi. So the last round, I talked about how we want to set up our zones to which we trade. We don't care about this stuff right here. Right now we don't, right? We don't care. This is irrelevant. That's irrelevant. I did this to Uber for a while. Like I just blacked everything out. And what I would do, you can keep it in front to hide it entirely if you want just to, clean your you want to just clear your head like when you're looking at it so it doesn't look like chaos, bring it to front. So I can block all that out. I don't need to see it because it's irrelevant. Once it's relevant, then I'll delete it. Okay, that's what that is. Now, so what this is my trading zone, right? I've identified where I plan to take trades on SoFi, where I plan on looking for calls and looking for puts. Where would I look for calls? Right? I will look for calls towards the bottom, right? Where would I look for puts? I will look for puts towards the top. Now I know this is a wide range, right? I know there's trades within the trade, right? We'll talk about that. But right now we have a high level view of the zone to which we're trading in, right? So always start zoomed out and then zoom in. This is gonna take me some time to explain, but if you did it on Sunday, it would take you no time, right? It would take you no. Hey, shout out to the minnows. Shout out, hey, and please, if you are a minnow, do not be afraid or scared or whatever, too shy to say you're a minnow. We all start from somewhere, and that is okay. If you tell us that you're a minnow, and I see a bunch of fish coming in the chat, that just tells me how I need to move as it relates to training, and then explaining myself as I'm trading live as well. Right. So, anyway, and that's the same thing for the other crown traders, or anybody else that's doing it, that's watching this live. Okay, because if they see this in the chat, then they also know how to navigate and who to speak to more so. Okay, or who to pay more attention to or give more attention to. Right. But anyway, we got our trade zone. Does it look fishy? Well, yeah, you're in the weak view and you see a lot of chop. This is just telling you that there's a lot of indecision with SoFi. Again, we're not going to dive too much into that piece, but I got to get rid of this. Hold up, because we got to talk about it. But that was an example. So you're starting the week out, right? You identify the zone you're trading in, but you also identify the trend that you're in, right? So you can clearly see that we're in an uptrend on SoFi, right? Now, technically, I would go here, but because I'm looking for 3 points of contact, right? And I got one here, here, and then here. So again, if you are looking at levels, looking at zones, you're looking for 3 points of contact. On the top side, I got 1, 2, and these right here. They're consistent. On the bottom, so the ascending line of support, I got 1, 2, and then 3, 4, and and we came down and retest this too. So if I were to correct my lines a little bit, we're pretty much right there. What did SoFi do? It just bounced off the ascending line of support, right? So we have to pay attention to these things. When you zoom out, you get a better overall understanding of how the market's moving, and then you line it up with the zone to which you plan to trade, right? Which is what we're doing right here. Okay, so let's keep it moving. Shout out to the Minnows. If you're intermediate, put a dolphin in the chat. We're gonna keep people engaged. If you're taking notes, just take notes. But I'm just trying to see. Hold on. Dolphin. I got a whole thing. We talk about the minnows, the dolphins, the orcas. We already know what time it is. If you don't know, check out the content. Ask somebody. All right. So anyway, so this is the high level view of this. Okay. So all I need to know here is that we're in an uptrend and we are at the bottom of my trading zone. We had some sell side liquidity. What does that mean? We seen that sellers push the price down, right? Or the price fell down, like the buyers kind of stepped off, right? The price got pushed down, and then it got pumped up by the buyers. So they pretty much were looking for the sellers. So beyond this point at 2481, a bunch of people probably poured in. It's like, oh, we're going down on SoFi. Why? Because they didn't pay attention to an ascending channel, right? And they got because then the buyer stepped in and just whoop, popped us right back above our level, our foundation, and we could be very well going on a rocket. We don't know yet. We'll see what happens in the market, but always got the notepad. All right, let's get it. So high level view, that's where you are. Okay, so once you do that, once you identify your zones for the trading zones, I'm looking for 3 points of contact, 1, 2, and 3. I'm not looking up here, right? I'm not looking at 3271 because that's 1 point of contact. I can come down here at 3260. Now I have 2 points of contact, but that's not strong enough for me. These are buy side liquidity grabs. Okay, so I look down here, right, and I do the same thing, right? I look for my contacts, and then there we go. Okay, and then we draw our lines, and then we keep it moving. Okay, so then after we start the week, I go to the day, right? Now keep in mind, as it relates to supply and demand, right? I do look for those on larger time frames. This is how your boy gets 300 to 500% gains relatively consistently when I'm on point. Okay. But if I don't see them, I don't force them. So on the week, I don't see it, right? I don't see a good representation of supply or demand. Now you can find it in there, but for me, I look for stronger signs of it. I'm looking for price action that aligns with my zones, right? That I look to trade. Okay. I be feeling like a dolphin, but the market make me feel like a minnow. For real though. So that's okay. You can be in between. You're growing. I love that. I got analogy. So, I want you to understand, like, when you're a minnow, right? Just think about the little guy in like any story, and you just want them to like make it through, right? So think about a minnow that jumped out of a small bowl, right? And is midair on his way to this bigger bowl or this ocean, right? Right? But we're looking at this minnow and it's stuck in midair. Everybody's rooting on the minnow, right? Everybody's rooting on the minnow. Everybody wants the minnow to make it to the big pond, right? The minnow had made the leap because he was forced out. He was either forced out or he's just determined to get the heck out, right? From the past, when you come from nothing, when you're grinding, when you just made so many sacrifices, when you just know you don't want to look back, eventually you get tired of being tired, stuck in that rotation of just whatever, right? Mediocrity or whatever you want to call it, that you take that leap. You take that leap of hope, and now we're all rooting for you. So you can be a dolphin on your way, feeling like a minnow, because being you probably weren't a minnow that long ago. Okay, so you're gonna shed that skin, right? And you're gonna be that dolphin, right? And just so you know, I just learned something because I swam with dolphins. Dolphins shed their skin like every 2 hours. Crazy work. Didn't know that. Anyway, super soft too, by the way. Super cool. Anyway, off topic. So we zoom into the daily. So now we started to get a little bit more of a you get a little bit more noise, right? You get to see a little bit as far as how the price action is moving. So when I look at this, I'm also still looking at my channel. What do I look at when I'm seeing my channel? Well, I intentionally put this halfway dotted line on my chart. Why? Because in my mind, the halfway point is like a crossroad in anything that we look at. If you get over the hump, then you're going up, or down, depending on which way you're looking at it. So, but pay attention. Look, if you look at this line, look, we either found some chop or we found some support, found some support, found some support, right? Had a false breakdown, right? Boom, got a liquidity grab, right? So this can tell you something if you put it on your chart, okay? But anytime you're playing halfway, it's like double dutch. It's like double dutch. So you got to be careful not to get slapped with the rope, right? If you know double dutch. So it's safer to play the highs and lows versus double dutch trying to jump between the ropes. So, but anyway, so I look at this and I'm doing the same thing. I'm looking to see if I see some price action that resonates, that kind of speaks out to me. I'm looking to see if there's identifiable supply or demand zones, right? I see some, but it's in an area that I really don't care about right now. So, and then down here, I'm like, okay, so I got one. So, price action. If you've seen the thumbnail of the previous one, you've probably seen my price action. Oh, do I have it on here? Yeah. Okay, let me bring this to the front. If you are new and you don't have this, then add it. I'm going to keep it over here. Screenshot it. Do whatever you got to do. Okay? But this is my cheat sheet of some high probability price action candlesticks that I like to trade. Okay? So in this example, like what I see on SoFi, well, I noticed that we have an engulfing bar, right? Unfortunately, it wasn't necessarily validated. So I don't really want to use it as a point of, well, I'm going to because all I got, but it's not a strong, demand zone for me, but I'm going to use it. And my levels are defined. Okay. I'm going to get rid of this red, by the way. It was just for reference. Come on. All right. So on my charts, my demand zones are blue. My supply zones are red. If it's an intraday play, then my zones are outlined in yellow. Just know that. Okay. So I drew this demand zone. Why? Because I have price action at the bottom of a retracement, right? The price action is the engulfing bullish bar. I draw a line from the top, or a box from the top of the previous candle to the bottom of the previous candle. So here's the candle that made the engulfing bar, right? Which gave me indication that it was going to be a bullish move, right? And then here's the candle before it. So my zone is the entirety of this candle from wick, the top of the wick to the bottom of the wick, okay? And then what do? So this is a zone. You can not trade SoFi at all. Like if SoFi isn't your daily bread or whatever, but you know that it can pop off once it hits a zone, then maybe you want to set an alert once you hit your demand zone. Because what happens? Well, we hit the demand zone, and sure enough, we popped out of it, right? And it's actually at the bottom of my trading zone entirely. So you see that? So 2481 is my trading zone. So we got to bounce, and we rocketed out of the demand zone. So this was a sign of a potential bullish move, and that's what happened. So you will get signs. So like if you missed this wave and you got caught up in this chop, well, a leap option would have saved your port or whatever, right? So fast forward time, right? We didn't quite make it back down, but we have our halfway points. We had other instances to which we were like still bullish, right? Once we broke back up to this half with some bullish momentum, we were bullish again. So it wasn't until recently that we just retested our demand zone, right? So with this demand zone, we rocketed back through like a Mario Kart, and now we're back above it. So now we're sort of bullish on this again until we confirm below 2481. Okay, so anyway, you have to identify your zones as you are um, zooming in. Okay. Now, what I like to do with my zones, I like to identify if it's a passive or an aggressive, and then I also would put like a D if it's a daily, right? So this is I would consider this a daily aggressive zone. So why? Well, because on the daily, we're not spending much time here. We're getting like a strong reaction. Like if this was a like a passive zone, for instance, it would look something like this, right? Where you get a lot of range boundness happening within the zone, right? You don't want to trade that. You have to be very very patient with this. But we're getting strong wicks, strong wicks, strong wicks, strong reactions to this zone. So for me, it's aggressive. It's an aggressive daily zone. So what does that tell me? That tells me that if we get the price action in the momentum at this zone, then without hesitation, I need to hop into a trade. So something like this, for example, I know we're not zoomed in, but something like this, once we fail through my demand zone, right? On the daily, of course, I know we have not confirmed below, but when you see a strong bullish momentum like back into the zone, that is a strong indication that you could be pretty bullish. So this would have been a signal to enter calls, right? Enter calls with very little risk. Why is it little risk? Well, because what's your stop loss if you were to enter at this level? Well, your stop loss is going to be right below the level for the most part. Well, not for the most part, but it's confirmation below this level. Okay, that would have been your stop loss, and your first take profit target. Technically, I mean, if you want to chip away, this is my foundation of 2481. So this could have been a take profit target. You really wanted to pay attention to this level to see if we were going to reject. Like if you reject here, right, and fail to break through, then it might not be a play that's going to work out. But you still don't move your stop loss, right? Unless you're just going to take an early take profit. But then your second take profit is the top of the demand zone. The top of a demand zone, right, is key to whether or not the play is going to break out or not. Because what happens is once you get back into a demand zone, if you see reaction where you don't break it, right, or you can't confirm above it, then that's a very, very strong indication that the bulls do not have the ability to pump the stock up. Okay, so that tells you that there's a strong chance that we'll have a continuation to the downside. So looking at this candle, we have a top wick as we're breaching the demand zone, right? This top wick is an indication that sellers have stepped in here and buyers potentially don't have, the ability to push the stock up. So we could be seeing a continuation if we see SoFi pull back below this 2514 target, right? Right. But just saying, right? Hopefully that makes sense. Also, on the downside, we have an imbalance between here and here, right? Imbalance. We're going to talk about that too. Essentially, the imbalance is the distance. So I have a center candle. Okay, I have this candle. I have the the action candle. Like, so the candle that's telling us, okay, well, we're gonna short here or we're going down. So we have the candle before it, and then the candle after it. The bottom of the candle before it, and the top of the candle after it. The distance between these two, right? The distance between these two makes up your imbalance, right? When you get an imbalance, um, after like a bearish move or a bullish move, that is strong representation of a potential continuation to the downside. Okay. If you don't get an imbalance, it's not as strong. It doesn't mean that it's not going to continue going, but it does mean that it's not as strong, right? So you just be careful, right? It's still probably anybody's game. And there's probably some volatility, some chopped in there. So, but anyway, so you look for these to help validate your bearish bias or bullish bias, right? So if you're in a short here, right, you're waiting to see how this candle closes to determine whether or not you're going to get out or stay in, right? Right. So when you see the candle close, and this could be a 1 minute, this can be a 15 minute. I'm high level viewing it so you guys can just understand what's going on. So let me get rid of this and this. So when you get this distance and you wait patiently for this candle to close, right? You're being told, man, there's a lot of sellers that like hit that ask button, right? And so that's what's forming that gap, right? That's what's forming that gap. When you guys look at an options contract, you see the bid, the mid, and the ask, right? You got your bidders and you have your askers, and you have everybody in between, right? So the gap happens when essentially people stop bidding and they just buy the price as is. They buy the, so how do you explain it? They buy the asking price. So if you have, like, if you go to a store, you go to a store, and let's say the new PlayStation 6 is coming out, right? It's retailing at, let's say, $6.99, because it's gonna be stupid. Let's say it's retailing at $6.99, the PlayStation 6, and everybody's lined up for the PlayStation 6, $6.99, right? And we're just buying it at cost, right? For the most part, right? But then some knucklehead buys up all the PlayStation 6s and starts selling them for $1,000, right? So we're coming in, buying at the base price, which would be the bid at $6.99. Here you go, $6.99. We'll buy it, or the mid, whatever. It'll be in between the two. Here you go, here you go, here you go. And then knucklehead shows up and say, you know what? I'm gonna sell these things for $1,000. The store ran out of them, right? So now everybody still wants a PlayStation 6, and everybody is willing to pay the $1,000. Ends up paying $1,000, and that's how you kind of get that gap, between the two, right? That's kind of how, I mean, if that analogy works, it works. I've used better analogies in the past, but essentially that's that difference, right? But we're playing it to the downside. It's in reverse, but I think you get the concept. Hopefully you do. Okay, so, but anyway, this is proof that people are willing to buy or sell or whatever at said price that's being asked of them, right? So let's see here. Any questions so far? Does that make sense? Okay. Does that make sense? So I wonder if I can do this. I'm going to set it up a different day where I'll have my tablet ready, and then I'll draw some things out, because then it'll be easily represented of what I'm about to explain to you next. Okay. So, but please let me know if you're still with me, and put a 1 in the chat. One in the chat if you're still with me and it makes sense. I'm cramming a lot right now, and so forgive me. There, all of what I'm talking about can be like a class in its own. Like I could talk about just demand zones in a 45-minute session. I can talk just about supply zones because the price actions are different. How how volume looks is different. In how you just explain it is just different. So it's, but right now I'm giving you a high level view and trying to detail a little bit as well. And hopefully it's just making sense. Okay. So I'm making sense. That's great. I'm gonna see if I can make some more sense for you. Okay. So we're gonna zoom in. So the whole premise right now was to set up our zones, right? And see if we can identify a supply demand. Okay. So now this, some might say this is supply, and I mean I could write this up as supply. I don't like it though, right? I don't like it just because I'm not really a fan of how much body is in this candle. Um, so I'm gonna zoom in to the 4 hour now, and with the 4 hour, for me, it's still a wide enough range for me to identify like these key levels or these key zones. Okay. So when I'm looking at this on the high side, you know what? I might have to treat that as, let me go back. Yep. Okay. I have to treat this as a supply zone. And I hate it because it's such a big range, but at the same time, it's important to know. Supply zone. All right. So you might see me share a chart that looks like this, right? Where I have a supply zone high and a demand zone high and everything in between, right? Make sure I gotta get this cleaned up. And again, for the supply side, we have our momentum candle, right, and the candle before it. So the candle that changed the direction, right, and the candle before it. So the entirety of that previous candle is what becomes my supply zone. Okay. Now this one for me is not strong. One, it hasn't been tested, but two, I'm looking back and there's a lot of chopping here. So I would put here passive, and this is a daily. So PD, I'm sorry. I think that's the order I should go. Man, doesn't matter. You do you, but I'm gonna do daily passive zone. What do I have here? Yep, daily aggressive. I just flipped around the parentheses. So if I see a P, that tells me that I got to be super patient when I get up here. Why? Because I know that once we get in here, man, we can do this all day. Oops. Right? We can just chop up in here. And I'm not looking to get chopped up, right? I'm not looking for this. So I'm going to wait till we cross this level as an early entry, right? And then I would add to my position if we fail to break back into this zone, and then I'll ride the wave down, right? The other option is to wait till you get to the top of a zone, and then you're going to look for that price action, right? So you look for bullish momentum through, and then a wick right back down. And if you fail back into your supply zone, then you know this is the seller's house. You ran through the front door and through the backyard, and you hit a fence and a guard dog, and then you ran your butt back through the house, and guess what? Guess where you're going? you ain't playing games, right? So like, this kind of how you could look at it. But anyway, all right. So I would put a passive, and I'm going to be very cautious as we approach this level, and I would be very patient as I approach this level too. All right. So we have a structure, right? I have a trading structure. In reality, you don't have to trade. You don't have to trade until you hit one of these zones. You can literally set an alarm down here or up here and go on and enjoy your day and then wait for the market to call you. Say, hey, Rel, SoFi just hit the demand zone and broke out. Big dog, you might want to look for calls. I'm be like, all right, hold up. Do. I'm in a call. Stop loss, bottom of demand zone. Call it good. My face is too big. Zoom out. Come on. Zoom out. All right. All right. Hopefully that makes sense. So you can wait for these things if you so choose. But some of us impatient, right? And we're trying to like make a buck. And you have to understand that not every ticker is one that you should be day trading, right? There's not one that you should be scalping. Some of these are swing trades, like exclusively, or they should be, or they should be treated as such. You might still make money in that day, but you might need to have a swing trader's mindset to day trade said stock, especially if you get one that's particularly choppy and's been in this state of indecision for the past few months, essentially, or past few weeks. All right. What time we got? We are 3 minutes. Okay, so I got to leave it at that. Um, so the only thing I also want to point out, like all of these tickers and stuff. No, essentially what I want y'all to know is when you're looking at the supply demand zones, you're looking for these type of price action candles. So top row, for example, look at the one that says hammer. It's like an inverted. It's a bottom hammer. It's an inverted hammer, whatever. Okay. Essentially, your demand zone on that first column row, is going to be the top and bottom of that red hammer, right? So the top wick to the base of the body. The next one is your engulfing, bullish engulfing. Your um, your demand zone would be the top and bottom wick of the red candle, right? The morning star. This is the bread and butter. If you see a morning star forming, man, be ready to pull the trigger. Um, the morning star, your demand zone is the top and bottom of that bottom doji candle. That whole range is your demand zone. Okay. And same thing. The next row is the bearish row. So that's after you hit an uptrend. These are the percentages or probabilities that you're going to get a reversal to the downside. So when you see a shooting star, then the top and bottom of that top star, that inverted hammer, that's your supply zone, right? Same thing with the bearish engulfing. The top and bottom of the green is your supply zone, right? Three black crows. I don't do supply demand zones on those. Typically, a doji is before those candles anyway, because oftentimes you're probably neutral, which is the last column that you see. So the last column, neutral, right? So when you get to a top or bottom of a zone and you start to see neutral movement and neutral price action candles, then 9 times out of 10, that neutral price action candle, the entirety of the candle, depends on if you're the top of a trend or a bottom of a trend, is going to be your supply or demand zone. Okay. Um, yes. Hopefully that makes sense. I don't draw supply demand zones off of inside bars. Okay. But I do pay attention to them. Okay. So does that make sense? I went over that so you guys can have an idea of how to find those zones. Because if you can do that and if you can establish patience, you can be dangerous. Part of my problem is sometimes I'm impatient. Sometimes I make mistakes. Sometimes I have like mental like stuff that's going on. Like sometimes like my personal life kind of blends. It's kind of hard to kind of separate it. You know how you supposed to, when you go into work, you're supposed to leave your crap at the door before you enter your workplace. We kind of got to learn how to do that when entering the market, because I think too often, and I am a culprit, that I'll get into trading, but I'm still thinking about what the hell happened at job at my job, or something that happened with family, or whatever it may be. And you have to compartmentalize that, and it's something that I work on. It's something I speak to, um, because the psychology of it all is really important. So if y'all found this helpful, right, then I need y'all to go to the link that I shared and put a heart on it, put an education hat on it, put a fire emoji on it, whatever. Why? Because as people, there's tens of thousands of like doctors and dean listers, for example, and they all see these links, but not everybody taps in, right? Why? Who knows? But if they see enough people showing interest, right, and that's telling them that maybe there's some value here, right? So we need to make sure that we are showing love on those posts that myself and the Crown Traders post, um, because it's a beacon, right? It is an invitation to the rest of the Discord that, hey, Rail might be onto something. Hey, Jumpman might be onto something. Hey, Spy King, hey, he's killing the game on the spy, whatever. He might be onto something, right? Like y'all interactions help. That's why I tell you to hit the like button and the subscribe button and the notification bell. It's important, right? Because that also sends a beacon to the world, right? That, man, this private live stream that they can see, they can't access, got a lot of likes. It got a lot of comments. Man, maybe we should tap in and become members. Maybe we should join this community because there's value here. So your guys' support by hitting those buttons, it's so important. You have no idea. It helps feed the system, right? It helps us continue making this content. It helps us get better, and it helps grow the community, right? You never know who you're gonna run into, right? So hopefully that makes sense. And if you didn't hit the like button, then come on now, dog. Come on now. But anyway, I got to get back to my family. I got some little girl's hair to brush, comb, and some football to watch. So everybody, thank y'all for being here. Enjoy the rest of your Sunday. And if I don't see you before Thanksgiving, I hope you have a beautiful holiday. Everybody, this is Stocks for Real, Sacrifice.